Good day, everyone. Welcome to our webinar for September 2025. As usual, we begin in America. By the end of July 2025, the US economy was definitely slowing down, and by the end of August, it was visible. Core inflation was 3%, still stubbornly above the Fed's goal of 2%, and the shock adjustment to the jobs figures showed much lower growth than we had been thinking about. Housing inflation remains very high at 3.7%, or 2% month over month. And gains in retail sales have been eaten up very much by inflation over the last 4 years. This is what we can see. If we inflation adjust the retail sales figures in America, they are pretty much where they were 4 years ago. Ignoring COVID-19, consumer spending is the lowest it's been since 2008. Clearly, the Fed's slowness in reducing interest rates has had an impact. Almost all the S&P 500 companies have now reported on the second quarter of 2025, and the results have been way ahead of analysts' estimates. Analysts were predicting 5.8% growth, and the actual figure is close to 13%. This, of course, was topped off last week by NVIDIA's great performance. Revenue at NVIDIA was well above estimates, and the company had earnings per share of 105 cents. That performance was further boosted by a $60 billion share buyback. The results, in our opinion, completely justify NVIDIA's high rating on the S&P. Let's take a look at the chart, which should be in front of you. As you can see, we had a new all-time record high over here on Thursday last week. And that shows that the bull trend is still very much in place. The market has recovered fully from Trump's V-bottom, which you can see over here. You can see there's his V-bottom. And what is interesting about this is that during that V-bottom, there was a lot of uncertainty in the market among investors. And that's why we get these very, very long candles, which show a huge range of trade inside the day, during the day. And you'll notice that as we came out of that V-bottom, the candles got shorter and shorter. And now they're more consistent with what we know. Of course, we've just made a new record high a couple of days ago, less than a week ago. But I believe that you should be considering the possibility of a correction. Remember the old market saying that nothing in the markets moves in a straight line. Nothing goes up forever. There will be some kind of correction. But we believe that the bull trend is now firmly in place, and investors are now focusing much more on the productivity gains which will flow from artificial intelligence. The JSE and other world markets, of course, will follow Wall Street up. What is also interesting in the last few months, excuse me, since the beginning of the year at least, is that the US dollar has fallen about 12% since the beginning of 2025. Much of this can be attributed to Trump's new tariffs strategy. Excuse me. He has undermined confidence in the country and in the currency. Large international investors are now questioning America's dominance. The Man Group, which manages about $192 billion in funds and asset management, says that investors should reduce their holding of US shares and go neutral on the US. The government deficit in America continues to rise, undermining confidence. Markets are being sustained by the optimism about the future of artificial intelligence. The national debt has risen to $37.2 trillion and is now costing about $1 billion a month just in interest. Sorry, not $1 billion a month, $1 trillion a month just in interest. About $9.13 trillion of that debt is held by foreign governments. Japan alone holds 1.15 trillion, the UK holds about 858 billion, and China holds 756 billion. The debt is equivalent to about 121% of America's annual gross domestic product. In any other country, that would be considered to be a serious debt trap. But America has more than 60% of the world's trade taking place in US dollars, so that tends to cushion it from the impact of high debt levels. Adding to investors' concerns, of course, Trump now wants to fire Lisa Cook. She's the only black woman on the Fed's board, so she's a board director at the Federal Reserve Bank. Trump's aggression towards the Fed is definitely damaging the American reputation among international investors, and that's obviously contributing to the weakness of the US dollar. Earlier in August, Trump demanded that Intel's CEO resign. Intel is obviously a chip maker. It faces very stiff competition from Samsung and TSMC, both Asian companies. Biden has already put $7.9 billion into the company to support it, and now Trump is crowing about a deal which he has signed with Intel that gives the American government 10% of the company. Some observers are saying that this is the first step towards the nationalization of key industries in America. America, of course, has always been a bastion of world capitalism. It has traditionally operated on Thomas Jefferson's principle that the least government is the best government. So this deal does not give the government a seat on the board of Intel, and it doesn't give it control over the company, but it is a step in that direction. And one has to ask, what is the point of the American government owning a share of Intel? It really doesn't seem to make sense. Okay, let's turn our attention now to Ukraine. Trump's meeting with Putin in Alaska was a diplomatic victory for Putin, but it brought the war no closer to a resolution, and Trump got absolutely nothing. While the meeting was on, both sides continued to attack each other. Putin did not concede anything, but gained credibility because of meeting with the US president. We believe the war will continue now until one of the sides cannot sustain it any longer. The Russian economy, of course, is in deep trouble. The ruble has fallen to 0.8 of 1 cent, of 1 US cent. That's about the weakest it's been for a long time, and you mustn't forget that that is against a dollar that has fallen 12% this year. We are now expecting European Union countries to put troops into Ukraine at some point. That, of course, would be a significant escalation, but at the same time a disaster for Russia. Putin knows that his future depends on trying to keep the war going, and he's not looking for any kind of ceasefire, especially not without territorial gains. It is becoming apparent that Russia cannot continue for much longer, so Putin's position is essentially unsustainable in our view. We're expecting a resolution of this war in the near future. Zelensky's meeting with Trump subsequently was heavily supported by the European Union leaders. The coalition of the willing is becoming a major supportive force for Ukraine. Ukraine's bombing of Russian oil refineries is having a major impact. It is estimated that as much as 20% of Russian refining has now been destroyed. This pushes up fuel prices in Russia and has forced them to import oil. There are also long queues at certain petrol stations in Russia which still have fuel. Sanctions have forced Russia to use Chinese parts to rebuild its refineries, but those parts are not compatible, and that requires a complete rebuilding of the entire facility. This has become a major problem throughout Russia. Russia currently has about 40% of its gross domestic product focused on the war effort. In our view, that is unsustainable and should come to an end soon. Ukraine's new Flamingo missiles have a range of 3,000 kilometers and carry a 1-ton payload. That makes a very, very big bang. Okay, let's bring our attention now to South Africa and to the political situation here. One of the bits of news that came out over the last month is that the South African Communist Party will be contesting next year's municipal elections against the ANC. This means that an end to the 100-year tripartite alliance. The SACP, the Communist Party, cannot tolerate the Government of National Unity and the ANC's alliance with the Democratic Party. This means that ANC support will probably fall even further next year. They may not even be the largest party in the GNU after that. We believe the DA should gain some additional seats in Parliament as a result. But the Government of National Unity has now survived for a whole year, and that is no small achievement. It has made some progress on reforms, but probably has not lived up to expectations generally. Gross domestic product is still wallowing around 1% or even less, and that's far from the Government of National Unity's goal of 3%. But some areas have definitely improved, notably the Department of Home Affairs. And the disagreements over the budget were finally resolved and lessons were learned. The best indication, in fact, of its strength is the rand, which continues to appreciate against the US dollar despite Trump's tariffs on this country. Turning our attention briefly to Transnet, the Minister of Transport, Barbara Creasy, says that Transnet's improvement is definitely on track. It will take longer than Eskom's. Eskom's return to the end of load shedding, and the reforms will include more efficiency and more private sector involvement. She says, "We are doing what the rest of the world did 20 years ago." The Treasury approved a 95 billion rand guarantee for Transnet, and that should enable it to meet its debt repayments for the next 5 years. The volume of goods transported has dropped initially because of a shortage of rolling stock, insufficient investment in infrastructure, and continuous vandalism and theft. Out of 25 private sector applicants, 11 have been chosen to operate 41 routes. Beginning in 2026-27, they should increase tonnages carried on the rail network by about 20 million tonnes per annum. The goal is to get the amount of goods transported to 250 million tonnes per annum, which is a very big jump from where we are right now, which is about 90 million tonnes per annum. Okay, the National Health Insurance Act was brought to Parliament in August 2019, finally approved by the National Assembly in June 2023. Obviously, it was signed into law by Ramaphosa in a desperate last-minute effort to save the ANC in the last election. It now faces 7 separate lawsuits because it is unaffordable and invalid. The complaint is that there has not been insufficient public consultation, and critical issues like how the bill will be funded have not been dealt with. The role of medical schemes and private health departments is also not clear. The NHI is a major sticking point between the ANC and the DA, and it will be impossible to make it happen without the DA's support. Right, let's look at the economy now. The South African economy is expected to grow by just 0.1% in the second quarter and 0.9% in 2025 as a whole. This is obviously well below the GNU's goal of 3%, and that's mainly due to a lack of investment. Gross fixed capital formation is expected to actually shrink in 2025 by about 1.5%. After that, it should start growing and grow by about 2.2% for the following 3 years. But there is some growth from the low inflation rate. Low inflation has pushed real salaries up, but mining and agriculture are still depressed. Agriculture, of course, is the wild card, and it may slow down in the second half of 2025. In the first quarter of this year, it gained 15.8%, compensating for the low growth elsewhere. Overall, South Africa's economy is muddling along, not really absorbing the school leavers that come onto the market every year, and but it is operating at a low inflation rate. The CPI, the Consumer Price Index, was up by 3.5% in July due to a rise in food prices. Meat was up 10.5%, vegetables rose 14.6%. April, May, June, and July have all seen sharp increases in food prices. Some of this is due to avian flu in Brazil and some to the foot and mouth outbreak here in South Africa. Vegetable prices have been impacted by excessive rains as well. Core inflation, which of course excludes food and fuel, was 3%, and the CPI was up 0.9% month on month, due mainly to increases in rates, and also the price of water. Letsetsa Kanyago is advocating that the inflation target should be reduced to 3% from its current level, which is 3 to 6%. That's the target range, so he wants it reduced to 3%. Kanyago says that the lower target will reduce the risk of investing in South Africa, and it will also reduce the government's interest bill on its enormous debt. So far, the Minister of Finance, Enoch Godongwana, has yet to agree, but I'm sure that they will come to some sort of an arrangement. Obviously, it's important for fiscal and monetary policy to be in sync. The unemployment rate increased in the second quarter to 33.2%, but the CEO of Capitec says that he does not believe that figure. He thinks it does not sufficiently account for the informal sector. He says the true rate of unemployment in South Africa is probably closer to 10%, and we are inclined to agree. There are millions of small businesses in the informal sector. There's no really accurate way to measure how many people work there, and we are inclined to accept what Capitec says about the unemployment rate. The Government of National Unity has not had a significant impact on unemployment so far, and that obviously is a problem. BankServe's Betty Index shows the number of electronic transactions in South Africa is slowly increasing. Factory output rose by 1.9% in the year to the end of June. Whether this can be sustained is not yet certain. In the 3 months to the 30th of June, exports to the United States grew. Chemicals, petroleum, rubber, plastics were all up by 4.3%. Motor vehicles and parts were up by 9.8%. Food and beverages were up by 6%. Trump's tariffs will obviously impact the motor industry the worst of all. But at the moment, units sent to America have already dropped to 2,875 in the first 6 months of this year, which compares with the 16,112 units that were sent in the first half of 2024. America is, of course, South Africa's second largest trading partner, so the tariffs are bound to have an impact. South African companies are already looking for alternative markets to sell their products. Now the South African motor industry is also calling for a 30% tariff on imports of motor vehicles into South Africa. Imports at the moment account for about 64% of all the new cars sold in this country, a stunning figure. As a result, Nissan is considering closing its factory here. The motor industry is operating at about 75% of its capacity, and it accounts for about 22% of total manufacturing in South Africa. South Africa's agricultural exports to the United States increased by 10% in the second quarter. This is probably because importers were trying to get in ahead of Trump's tariffs. Fruit exports to the United States are about 26% higher this year than they were last year. NERSA, the National Energy Regulator of South Africa, has admitted to making a big mistake in Eskom's energy shortfall calculation, and that means that Eskom is now in a position to recover about 54 billion rand from consumers. Eskom plans to recover about 12 billion of that this year and about 23 billion the year after. That will obviously have a huge impact on the cost of electricity for consumers. Many small businesses will probably not survive, and consumers will just have to pay more. NERSA has once again demonstrated its incompetence. Many government agencies in this country are incompetent, that's quite clear. Eskom's energy availability factor for the 3 months to the end of August was 65.4%. Recently, the EAF has been between 62 and 70%, which is a huge improvement over 2 years ago. One of the reasons for this is that 3 major units have come on stream: Medupi's Unit 4, Kuberg's Unit 2, and Kusili's Unit 6. Altogether, these 3 units provide an additional 2.5 gigawatts of power to the grid. Eskom's main problem now is that it is pricing itself out of the market. All right, let's look at the rand. I'll change the chart here. Right. There we go. Let's put a bit more data on here. This shows what's happening to the rand at the moment. And you can see that it's basically range bound against the US dollar. It's tested the 1750 level 4 times now. It actually broke below it the other day on the 22nd of August briefly, and then weakened again from that level. Its strength is obviously linked to the move in international sentiment towards risk on. And of course, as fears about Trump's tariffs have faded, investors have focused again on artificial intelligence, so there's been a shift back towards risk on. Productivity from AI is expected to impact the profits of all companies, not just in America, but worldwide. On the 3rd of July, let me just see if I can find that here. Yeah, there it is there. You see that low point there. On that day, the S&P made a new record high, and you'll see the rand touched this level here at about 1750 on the same day. And for the same reason, because of the move towards risk on amongst international investors. We believe that the rand will eventually strengthen to better than the 1750 level. In other words, it's likely to break down through this resistance at 1750 and to strengthen from there. The main reason for this is the positive sentiment that is coming through from Wall Street. And the rand, of course, is also one of the most liquid emerging market currencies, and as such, when sentiment shifts towards risk on, it tends to strengthen very quickly. Even if sentiment in South Africa is neutral or negative, it still strengthens. The relative success of the Government of National Unity is helping, and it is encouraging foreign direct investment. But fluctuating attitudes of international investors are actually a bigger factor in the rand strength in our view. Okay, let's move on to talk about commodities. I want to begin by looking at the oil price, the price of North Sea Brent oil. I'm just going to put a bit more data on the screen here. Okay, there's a bit more data to show you the price of oil in US dollars per barrel. You'll notice this long-term support level here at $72 a barrel. It was broken in September last year, and now it has been broken much more convincingly, and a new bottom has been set here at about $60 a barrel. Obviously, a factor is now becoming the destruction of the Russian oil refining capacity, which is beginning to impact also on oil exports from Russia. Oil speculators were briefly encouraged by Trump's meeting with Putin in Alaska, but that turned out to be a non-event, and the oil prices continued to move downwards. In our view, the general decline in the oil price is represented by this trend line here, which you see a long-term downward trend line supported by quite a few cyclical tops, and we think that trend line represents the shift towards alternative energy sources, most importantly solar. Solar is becoming cheaper and much more widespread, and we see that that downward trend is going to continue, and that the new base here at $60 is at $60 a barrel, with 72 now becoming a resistance level. Okay, let's look at platinum now. Platinum, obviously a very important commodity here in South Africa. Um, and what I want to just draw your attention to here is put a bit more data. There's been a long-term, if I put 10 years data or even all of the data on the screen, you can see there's been a long-term downward trend in the platinum price, basically since the subprime crisis in 2008. Now, in the last few days, let's go to a 2-year chart, you can see that that downward trend was broken quite convincingly on the 19th of May this year. And we did actually draw your attention to this in last month's confidential report, and we pointed out there the supply problems that are plaguing the platinum industry at the moment. There basically has been insufficient investment into platinum group metals for a long time, and especially platinum has had no new investments. This has resulted in shafts being closed and workers being laid off. And the point to understand is that it takes about 10 years to build a new platinum mine and bring it into production. So we believe that the upward trend, which is now well on its way, is likely to continue. That will also be made stronger by the growing popularity of hydrogen fuel cells. Fuel cells are gaining popularity as a practical alternative to solar power, and we expect platinum group metals to continue rising. Okay, I'd just like to also then briefly talk about gold. We did talk about gold in our last confidential report, and at that time we drew your attention to the fact that there was resistance here at this level of 3424. We suggested that resistance would be broken in last month's confidential report. Here you can see the upside break taking place, and you can see it's really gaining momentum. Gold has moved strongly above $3,500 an ounce now, and you may recall a while back we did a similar announcement when the gold price broke above resistance at 2060. That was in March 2024. Reported it in the confidential report, and you can see what happened to the gold price after that upside break. So there could be a repeat of that now. It looks like gold is moving up very, very strongly at this time. Okay, let's turn our attention to some companies now. I'd just like to say that the winning shares list obviously still working well. The number of shares in the winning shares list has risen to about 120 shares, and this is mostly because the market itself has been making a series of new record highs. Out of those 120 shares, about 10 have gone down since they were added to the list, and 110 have gone up. 3 new additions that we think are worth looking at is Sasol. Sasol has suddenly started to perform really strongly, you can see here. So we added that to the winning shares list very recently. Another one is Astral, and a third one is Grindrod. So take a look at those 3 shares, they've just been added. The worst performer on the list is First Rand. Now First Rand obviously is a big bank, and it's down 4% since we added it to the list. That's the worst performer on the list, and you can see how it's sort of drifting out sideways. But I can just tell you that this share is a really good quality share, and it's one that you should strongly consider. It's trading at a level which we regard as relatively cheap, and we see it as undervalued and we're waiting for it to recover. In fact, the whole JSE banking index is worth looking at. Right, so I'm going to put that on the screen now, the JSE Banks Index, because it's really starting to perform well. Okay, here you see it. I'm just going to put more data on the screen. Gosh, let's even go back further. Right, here you can see what's going on with the banking index. You can see here's COVID-19, and then a steady recovery, rapid recovery of the banking index, and then we had a kind of sideways movement for 2 years. But now, since the GNU came into existence, the banks index has gone up quite strongly. Obviously, banks will benefit from the government of national unity, and we think that they are still very undervalued. If I zoom out here, I can see that the dividend yield on the banks index is still above 5.5%. Generally speaking, when any blue chip shares on a dividend yield of 5% or more, you can pretty much buy it unless there's some news that indicates that it's going to go bust. But I mean, for most blue chip shares, especially big banks like Standard Bank and FNB, when they're trading on a dividend yield around 5%, they're a pretty good buy. Okay, of course, the one share which doesn't conform with the banking sector is Capitec, and we have long been in favor of Capitec shares. 7 years ago, we wrote an article about Capitec. I'm just going to put that on the screen for you. All right, there's the whole history of Capitec since it listed on the stock exchange. Here you can see the subprime crisis of 2008. We published an article over here on the 19th of February 2018 and suggested that you buy Capitec at 800 Rand. We added it to the winning shares list over here on the 4th of November 2023. There's COVID-19, by the way. And at that time, on the 4th of November 2023, it was 1855. And last night it closed at 3,479 Rand and 14 cents per share. So what a fantastic investment. It's also worth remembering that Capitec in last year, in 2024, they paid out a dividend of 65 Rand and 10 cents. Now you've got to understand, this is a share that you could have bought in March 2000 for 92 cents. There you can see, right there, 22nd of March 2000, you could have paid 92 cents for the share. It's now trading for about 3,500 Rand. And it paid a dividend last year of 65 Rand a share. So you really would have made good money on this share if you'd invested in it at the beginning. All right, now the next share I want to look at is MTN, the MTN Group. This, of course, is a connectivity company in the cell phone business that competes with Vodacom, Cell C, and Telkom. Most of its business is in the rest of Africa, not in South Africa. In fact, I think the South African market is its third biggest market. Nigeria is its biggest market. In its results for the 6 months to the 30th of June this year, it reported revenue up 23.2% and headline earnings per share of 645 cents per share. This compares with a loss of 256 cents in the previous period. Nigerian revenue alone grew 54.1%, and data revenue in Nigeria grew by 68.5%. And of course, the figures were strongly supported by a very stable currency in Nigeria during the period. Obviously, MTN, if you look at their chart, let's just take a bit more of a look here. Okay, you can see we added it to the winning shares list over here on the 15th of January 2025. It was 97 Rand then and 29 cents. It recorded an all-time record high up here on the 14th of August, just the other day, and at that point it was trading for 172 Rand 68 cents. It's obviously more volatile than Vodacom, but it has, in our opinion, more upside potential precisely because of its exposure to Africa. All right, let's look at Premier. Don't think I got that right. Let's try again. Something going on here. Not getting. Oh, there we are. Okay, I've got it. Sorry for that technical problem. Premier, of course, is a major business producing baked products in South Africa, mainly in Southern Africa. It also has businesses in feminine hygiene products, and it produces a wide variety of confectionaries. So here you can see we added it to the winning shares list on the 21st of August last year. At that time it was trading for 76 Rand and 35 cents. It closed last night at 143 Rand 66 cents. In its results for the year to the 31st of March this year, revenue was up 7%, headline earnings per share were up 26.8%. it's obviously one of the major factors that caused us to add it to the winning shares list over here in August last year was the fact that it was added to the JSE All Share Index. And once a share is added to the All Share Index, it tends to be bought up by index tracking portfolios. Well, they have to buy it in order to continue matching the index. So that was going to always be a boost for the share, so we put it on the winning shares list. Obviously, it's now in a strong upward trend, and we expect that trend to continue. Since being added to the list, it's gone up about 88% in a year. The last share I want to talk about is We Buy Cars. This has been a favorite of our shares of ours since it was listed in April 2024, and it has performed unbelievably well. Okay, there's quite a few notes on this chart. I'm going to take some of them off here. But the key is that we added it to the winning shares list on the 3rd of May, 2024, last year. The 3rd of May. Shortly after it was listed, it published its maiden results. There's a bit of profit taking, and the share's gone up very, very strongly. So at the time that we added, it was 20 Rand and 85 cents. It closed last night at 54 Rand 50. There's a bit of a sell-off going on here, a bit of profit taking. We expect it to recover from this, and we expect the company to continue doing extremely well. In its excuse me, in its results for the 6 months to the 31st of March this year, revenue was up 15.2%, and headline earnings per share were 121.5 cents per share. Buying volumes were up 12.9%. Selling volumes were up 13.5%. And that obviously has to do with their buying and selling of motor vehicles, second-hand motor vehicles. But we see this shares being in a steady upward trend, and we reckon it should continue to perform well. Sorry, the final share I want to just quickly talk about is Purple. Purple Capital, you probably know it because it's famous for its easy equities. Wait a minute, sorry, I seem to be getting into a bit of a problem here. So we've got Purple on the screen now. Let's go to 1 year. Let's go. So you can see here, we added it to the winning shares list on the 16th of April this year. It was then 120 cents. It's gone up about 41% in under 5 months. And the results for the 6 months to the 28th of February this year showed revenue up 25.8% and headline earnings per share up a whopping 204%. They have an active client base of over 1 million people now, which increased by 8% during the period. So we see this share as now starting to really appreciate. You can see that we added it to the winning shares list when it came out of the sideways movement here in April last year, and it really hasn't disappointed us. Okay, folks, well, that's about all I have. Remember that you can call me or send me a WhatsApp message. My phone number is 071 5022 383. Give me a call or send me a WhatsApp if you want to have more information. Let me repeat that, 071 5022 383. Thank you very much for listening. I hope that you got something out of it. Thank you.